Coming to you live from the world headquarters right here in Houston, Texas of Concenture Wealth Management. And this month, we're actually doing it right here in my office as opposed to one of our conference rooms. I couldn't be more excited. You probably have noticed the other gentleman on the screen. We were fortunate enough to get the CIO, the Chief Investment Officer of Sanctuary Wealth Management, our partner, to come online. And we've agreed to do this on a quarterly basis to walk through and give you his insight about what's happening in the market, what's happening in the economy, and really the things that we should be thinking about. Really excited to have Jeff Kilberg on this call. Just so that you know, Jeff weighed in when he was at his peak playing football for the Golden Domers, University of Notre Dame, at 302 pounds, 6'4". He played center, which none of us would believe right now. But Jeff, I just want to say thank you very much for joining us.
Well, Robert, pleasure to be here, and thank you so much. And I can't wait to see you and all the folks down in Houston. But yes, I'm a long way away from my 302 pounds, but my knees are quite happy that I'm a little bit lighter.
I can only imagine. Well, let's kind of get into it. You know, one of the things that we've really seen happening here over the last month or so, really, I'd call it the last quarter, is a lot of talk about, especially with headlines coming out of the Fed and Treasury, about the two big I's, interest rates and inflation. Kind of what's your take?
Well, Robert, I spent a lot of time back to my late 90s and 2000 where I was at the pits of the Chicago Board of Trade. I traded the 10-year note, 30-year bond futures. So I have a pretty good pulse on interest rates. But the inflation component, which is certainly a dual mandate for the Federal Reserve, inflation is tangible. Here in Chicago, I know the Federal Reserve strips out food and energy. Clearly, I like a lot of food and I use a lot of energy to power my vehicles. But I think the fact that their goals for inflation, they're achieving their goals. So that's going to be part of their dual mandate. But from an interest rate perspective, I like to utilize my experience and really get a better understanding that we're going to be okay. I think it's time to just breathe. If we look at the 10-year note, about 1.5%, I think it's tethered to 1.5% for Q4 of 2021. And these lower interest rates, historical low interest rates, are going to allow the economy, which has been dislocated in the recovery, it's going to allow the economy to continue to heal and grow.
Awesome. So I want to say thank you to everyone who's paid attention to this in the newsletter. If you want to find out more about our conversation, just hit the button and click over to our website under Insights. And Jeff and I are going to continue the conversation, but for size, we have to shrink this down. By the way, if you're watching CNBC and you see Jeff on, now you know who Jeff's with and what team he's on. So thank you. I hope everyone has a great month, and we'll talk to you soon.